Hi there, my name's Connor, and in this video we're going to be taking a look at the latest UK Help to Buy housing data and whether or not the scheme, which has now come to a close, poses a risk to the UK housing market. But before we jump into the video, please remember to hit that subscribe button and of course hit that like button as well. So, in 2013, the UK government introduced a new scheme designed to help those struggling to get a foot on the housing ladder. The name of that scheme was Help to Buy. The Help to Buy scheme was initially only meant to last 3 years, but here we are almost 10 years later with the scheme only recently having come to a close. The Help to Buy scheme enabled those unable to get a large enough deposit together the opportunity to obtain a mortgage with a deposit of just 5% on a new build home. The scheme allowed buyers to borrow up to 20% of the purchase price of a property, 40% if you're in London, up to a maximum value of £600,000. The scheme was only to cover new build homes, and this, as you can imagine, sent profits and dividends in the house building sector skyrocketing. Not only that, the data shows that new build homes are priced up 22% higher than comparable homes outside of the scheme. To illustrate these skyrocketing profits and dividends, former chief exec of Persimmon, Jeff Fairburn, was on track to earn a massive £110 million bonus before it was devastatingly cut to just £75 million. And I know what you're all thinking, poor Jeff. So how many people have used the Help to Buy scheme? Well, since 2013, when the scheme started, more than 355,000 properties with a combined value of £99 billion have been purchased with Help to Buy equity loans. The total value of the equity loans is £22 billion. So, for those of you who don't know what the Help to Buy scheme is or how it works, here's a quick recap. Let's say you want to buy a home with a purchase price of £200,000. You put forward 5% deposit, which in this case would be £10,000. The government lends you 20% or 40% if you're in London, but we'll do 20% in this example, which for this example would be £40,000. And this would be lent to you under the Help to Buy scheme, bringing your total deposit for that £200,000 property to £50,000. You then have a mortgage covering the remainder of the purchase price, so a £150,000 mortgage. The government Help to Buy equity loan, that £40,000, is interest-free for 5 years. From year 6, you have to start paying back that loan at an initial interest rate of 1.75%. From year 7, that interest rate goes up by the Consumer Price Index, or CPI, which in the original reports for the scheme was modelled at just 2%. However, this is, in my opinion, where things start to get a bit concerning, because CPI, as of the 12 months to April 2022, so April of this year, was 9%. We are currently living through kind of 1970s style inflation and interest rates and all that kind of stuff, and cost of living crisis, and a war in Ukraine. There's a lot going on right now. And so the worrying part about this is that because we're in the middle of all this uncertainty, people are already struggling to buy food and heat their homes and fill their cars up, which in my opinion has the potential to further fuel the fears of a property market price easing. Now, I'm not keen on saying crash yet, because I don't think there's enough data to support a real crash, where we're talking 20-30% plus declines in price. But I think we are going to see a slowdown and an ease. But before we get a bit into that in any more detail, what is my big problem with the scheme? Why am I not a fan of the Help to Buy scheme and what it does? Well, the major benefit to home ownership is its potential to help you build real long-term wealth. But when you buy a property through the Help to Buy scheme, you don't get that benefit. And here's why. When you come to sell, and if your home price has risen, which is exactly what you want your house price to go up in value, the amount you have to pay back the government increases by the same percentage as what your home's value has risen by. To give an example, if you borrow 20% on a home worth £300,000 and you sell it for £400,000, £80,000, which would be 20% of that, is going straight back to the government. So you are quite possibly going to end up stuck on the same rung of the housing ladder as you started, unable to progress. And I haven't even touched on the atrocious build quality of a lot of these new build homes. Maybe instead of taking massive multi-million pound bonuses, some of these house builders could have spent a bit more money on attention to detail and quality of work. And I want to be clear, I'm not slating all house builders. There are some great ones out there. It's just a shame that there are some truly terrible ones out there giving the good ones a bad name purely by association. So, does the Help to Buy scheme pose an immediate risk to the UK property market? Personally, I think not yet. However, if interest rates continue to rise, we could end up in a position where users of the scheme are struggling to make their monthly payments, thus causing them to fall behind on their payments and possibly defaulting on their mortgage, which doesn't even bear thinking about. But we're not at that stage yet. It's important to know we're not at that stage yet. People aren't currently defaulting on their payments. People aren't falling behind on their mortgages and their loan payments. An important thing to remember is that there's things you can do if you start to fall back on your mortgage payments, or you think you're going to start falling behind on your mortgage payments or your Help to Buy loan payments. You need to contact the lender. And these, if users out there, they need to contact their lenders and they need to explain their situation, because there's a lot of things that can be done to help before you default on a loan or a mortgage. Most lenders out there don't want you to default because they want to get a return on their money, but two, it ends up in most cases costing them more money to repossess a home and then sell that home than it does to get have the long-term money coming in from a mortgage. Because in a lot of situations where they repossess a home, when banks repossess homes, they stick them on an auction and they sell it for whatever they can get to recoup some of their money. When it gets to the point where they've repossessed the home, they just want to make back as much of their money as possible. They're not worried about getting a return. They want to get as much of their capital back as possible and move on to the next one. But that's it from me, guys. I hope you found this video useful. If you did, please remember to hit that subscribe button and of course hit the like button, and I'll see you in the next one.